Good morning, everyone. Welcome back to another episode of Breakfast Trades. Today, it's going to be a fun episode. I'm going to be talking about where to get started in trading, where to get started in crypto. So I really hope you enjoy this video with a nice cup of coffee, and let's just get right into it. Step one. Personally, I'm not very into reading books. I read a little bit here and there, but I know a lot of you are because I get a lot of questions on what books are good starting points. Well, I just went to Amazon and I typed in trading books. Pretty straightforward. You can look at the reviews here. You can look at the titles, and obviously titles and covers are all marketing. Can't say that this one would be good, but it's good to go and read the reviews and see if it's a good fit for you. Like obviously this one has a really cool cover, so this one catches my eye. Trading Wisdom, this one is from Cheds, actually, Big Cheds. Awesome. I actually have this book. I got about a chapter in and I'm just trying to get through it. I've just been very busy lately, so definitely working on that book. Highly recommend. I like it so far, and I really like Cheds on Twitter as well. He's a very smart guy and he brings out a lot of education as well as I do. So definitely one that I would say is probably worth checking out. But again, you guys, you can type in technical analysis books, you can type in investment books, stock market books, etc. Okay. You can also go over to Google and start finding blogs or reliable resources, or finding market terms that you don't quite understand and Googling them and learning more about what they are. And once you find some really good topics, I would say really dive into it and make sure you understand it 110%. One of the biggest things I really dove into getting started out was Wyckoff, which deals a lot with market structure, distribution, accumulation. And so I not only tried to learn what those terms meant, but I also tried to learn about Wyckoff and about each section of distribution and each section of accumulation and why they happen and what makes them happen and what do the terms mean. And then you get into, there's psychology into this. So then it's, what is the psychology behind why the market does what it does? Step two, and this could go a little along with step one, but basically you need to define a specific goal. What is your goal of getting into trading, of getting into crypto? Do you want to make a ton of money and find financial freedom? Do you want it to be a side gig, right? What do you want out of it? So that takes you to measurable. What are the measurable targets you want to achieve? You want to have a nice side income. You want to just dollar cost average into some assets and hope over the next 10 years that they appreciate in value. You want to turn trading into a full-time job, and you want to do it every day. You want to quit your regular job and have this be your main source of income. Or you just want to learn the markets as a side hobby because it's fun and you've already made a lot of money, and you just want something else to do, etc., etc., etc. Okay. And then you have to make sure it's achievable for you, your lifestyle, and your personality. A lot of people have a big misconception about what trading is. They think that they're just going to start trading and buy Rolexes and Lambos and take really fancy trips and all this stuff. And there's a lot more that goes into it, and a lot more background things that people don't even see. So you need to make sure that it is achievable for you. All right, not for anybody else. We all have different personality styles. We all have different lifestyles. We all have different financial backgrounds. And so what works for one person that you see online on Twitter might not work for you, right? So you need to really figure out what will work for you. How much free time do you have available, et cetera, et cetera? Because a lot of these people you'll see that are 24, 25-year-olds, no job, they are doing crypto full time. They don't have a wife and kids, a big family to take care of, so they have a lot of extra time to really spend on the markets. If you have 2 or 3 kids, you're not going to be able to monitor the markets as often as these people, so you might have to change your goals a little bit to meet your lifestyle needs. Make sure that your goals are obviously realistic. All right. If you think that you're just going to start learning the markets right now, having known nothing about them, and in 2 months you're going to be a full-time trader, I will tell you that that is unrealistic. Now, you might get lucky and the market might go absolutely insane and you just buy everything and make tons of money, but that doesn't mean that you are just automatically a full-time trader and can do it profitably consistently for a long period of time, right? Because remember, the market changes over and over and over. So what works at one point might not work at another. So a lot of people get very lucky. They enter into markets at certain points. They have one bias, they know nothing else, and they can just take full advantage, go big, no risk management, and they make a ton of money. But when markets change, they are still risking a lot. They're taking big risks and conditions are different, and they haven't learned how to adapt to different market conditions, and they can give all their profits back or worse. So it's very important to be realistic about trading and investing and what it really entails and the actual risk that is involved with it. And lastly, timeliness. So you should set a timeline. All right, I want to know this much about the market by the next 2 months, or in the next 2 months, I want to have a good background to be able to start diving into learning about actually trading and not just learning about how the markets work, et cetera, et cetera. Or in the next 2 years, I want to be trading full time, or in the next 2 years, I want to be making $500 a week just through trading, or in the next 2 years, I want to build my portfolio to X amount of money. So there's so many different goals, so many timelines. Make sure you're setting a realistic timeline, but also you're not setting a timeline that's so far out that you can be lazy on it and forget about it for too long. All right. Because a lot of people give themselves too much time to set a timeline, and then it's so far out that they just kind of slack off on it and forget about it. And then by the time that starts creeping up, they're like, oh shoot, I got to get all this in at once now. That is not the right way to go about it.